Welcome to part 2 of video. In part 2, as I said, we'll be discussing about dollar index and its components. What are the components? We discussed three components mainly. Euro versus USD, GBP versus USD, then USD versus JPY. Lastly, we discussed about USD versus INR, though it is not part of the dollar index. So, always I say this before I go into that. Dollar index and Euro USD, GBP USD has an inverse relationship. Dollar index and USD JPY has a direct correlation. That's the first thing which one has to understand. If somebody is watching this video for the first time or trying to understand this is something which you have to understand. So logic is simple. Why? Because it is dollar index, dollar based index, whereas this is Euro versus USD, GBP versus USD. So which is why it is an inverse relationship. Now let's go into the details. Dollar index closed at 102.183, 1.7% down this week. Euro USD 1.0894, 1.2% up this week. GBP USD 1.2675, 1% up this week. USD JPY 142.15, 1.9% down this week. USD INR 83.020, 0.5% down, more or less flat. So overall in this year, dollar index is down 1.1%, almost flat. Euro USD is up 1.8%, while GBP USD is up 4.8%. USD JPY is significantly up 8.4%. USD INR is flat. So overall in this year, what has happened? Dollar index has done nothing. Basically, it remained where it was, but your JPY has lost significant value while GBP has gained against dollar. That's why it has done a balancing act and it is more or less at the same level. If you see in the candlestick yearly chart, the dollar index, Euro USD and GBP USD has formed a doji and it will close mostly at the doji. One is at the upper, the other two at the lower. That is how it has formed. So now in this week what happened? So dollar index, last week it formed a solid green candle, but this week ideally it should have opened higher had it got strength, but it opened like a kicker or a reversal type of candle slightly in the middle of the previous week's green candle and formed a solid red candle. So because of it formed such a solid red candle, the Euro USD and GBP USD both formed a solid green candle. Of course, with a slightly upper wick, hence like it didn't close at the high point, it came down. So either those two formed a green candle due to which it formed a red candle, or because it formed a red candle, those two formed a green candle. Whichever way one wants to look up, but the best way to look at is the bottom up. So look from Euro USD how it has closed, GBP USD how it has closed, then roll it up. So basically now dollar index is significantly below and it is significantly going down. In the monthly chart it has formed a solid red candle, while Euro USD and GBP USD formed a doji till now in the monthly. In the daily it is on a significant downtrend. Of course on Friday it formed the first reversal, I would say. Hence this formed a pullback from the upper band, Euro USD and GBP USD. So dollar index is below all the moving averages in all the time frames, and not in all the time frames, in daily time frames, and in the weekly it is just above the 200 week simple moving average and exponential moving average, just opposite for Euro USD and GBP USD. What it is above all the moving averages and exponential moving averages in daily time frame. In the weekly it is just below the 200, it is below the 200 week simple moving average and exponential moving average. In the monthly, of course, the 50-month moving average is something where it is taking support. That is what it is. GBP USD JPY, Japanese yen, it is also last week itself I said, one can see my video a month back where we said that the high that it has touched, it is not going to close there, it is going to fall. That's what we said. Okay, it started falling. And this week yet another solid red candle, fifth week in succession it formed a red candle and it is now touching the Bollinger lower band in the weekly chart. In the monthly chart it is on a significant downturn, second month of red candle. In the daily chart it is nicely sliding down along the Bollinger lower band. That means the bands are not showing exhaustion. It is below all the moving averages, exponential moving averages in the daily time frame, but in the weekly time frame it is slightly below the 50-week simple moving average and exponential moving average, but I feel because it has closed in such a way, there will be a short covering rally that will come next week, which will take it up above the 50-week simple moving average and exponential moving average. USD INR, on the other hand, as I have been telling, it is forming a rounding top kind of thing, but it will not fall. It is going to jump up beautifully in 2024, but it is forming a sideways candle. This week it formed, of course, a solid red candle. It is below the 50-day moving average in the daily chart, but overall we will see a powerful rally that is going to come in the dollar, in the USD INR in 2024. Thank you very much. In part 3 we'll be discussing about US 10-year Treasury, Brent and NYMEX. Thank you.